Screenshot பண்ணுங்க அப்படியே நீங்க ப்ளஸ் ஆஸ்கிங் அப்போ உங்க வீடியோ டைம் தெரியும் ஸ்கிரீன்
ஓகே
இப்போ இன்டராக்டிவ் இதுக்குள்ள நான் போய்க்கலாம் அது அவங்களுக்கு தெரியும் பிரச்சனை இல்லை அவங்களுக்கு ஓ எனக்கே சரி மைக் தேவையில்ல அதுலயே இருக்கு என்ன அன்மியூட்ல தான் இருக்கா okay so we are continuing with our classes on national account statistics. I think in the first class we started with the basics of circular flow of income, and then we started learning the measures, and then the second class we started with our methods. We have reached up to the stage of okay, so we have reached up to the stage of completing all the three methods. I think some of you had even asked questions about like the methods, the uses of it. All of those things we are going to discuss in today's class. There will be issues and difficulties in measuring the national income by different methods, which also we will be discussing in today's class. So what we are going to do right now is I'll just mention whatever we have completed so far. Then, first is we have studied circular flow. Second is we have studied about the measures. Third is we have studied about the methods. In case of the methods, we have studied about income method, expenditure method, and product method. We have studied domestic income and national income. Across all the three methods, and mainly by the product method, we have studied GDP at market price, factor cost, NDP at market price and factor cost, GNP at market price and at factor cost, and NNP at market price and at factor cost. We have written the formulas according to starting with the market price, and finally we have announced NNP at factor cost as the national. And we have also given the logic why we were not picking up market price, but we were picking up factor cost. And we have also given the logic why in the newspapers GDP is being mentioned instead of NNP, because GDP will be usually bigger than the NNP. So these are the things which we have completed so far. In the circular flow, we have also mentioned that by all these three methods. Yeah.
Hello?
All these three methods, we should get the same answer. Screen share பண்ணணுமா? ஏன்? என்ன பாஸ்? நியூ ஷேர் பண்ணுமா?
இல்ல ஒரு ஸ்டார்ட்ல தான் இருக்கீங்க ஆல்ரெடி.
ஓகே தான் போய்.
சொல்லுங்க ஒரு நிமிஷம் ஸ்டாப் பண்ணுங்க. ஸ்டாப் பண்ணுங்க மேடம். இத க்ளோஸ் பண்ணுங்க.
இப்போ தெரியுங்களா?
இப்போ போய் நியூ ஷேர் கொடுங்க. ஷேர் ஸ்கிரீன் கொடுங்க.
அப்படிங்களா? உங்க போன்ல வச்சிருக்கீங்களா? சரி ஓகே.
இல்ல அந்த இங்க மோஸ்ட் பண்ணுங்க. இப்போ ஸ்டார்ட் பண்ணி கொடுங்க.
நீங்க ஈஸி இன்டராக்டிவ் டூல் கொடுக்குறேன்.
இங்க இருக்குங்க.
இங்க இருக்கேன்.
அது வீடியோ லாஸ்ட் எடுத்து இப்போ நீங்க ஃபுல் இப்போ அந்த இது நீங்க ஃபுல் ஸ்கிரீன் பார்த்தீங்கன்னா உங்க வீடியோவும் தெரியும்.
நடுவுல வந்து போச்சுங்களா? ஒரே நிமிஷம். இப்போ தெரியுதா?
இப்போ தெரியுது. இப்போ நமக்கு தெரியுது.
நான் தெரியுது ரைட். ஒயிட் போர்டும் தெரியுது.
ஒயிட் போர்ட் போடுறீங்களா?
ஸ்கிரீன் தனியா வரும். மேடம்
ஸ்கிரீன் தனியா வரும் பாருங்க இல்லையா?
ஸ்வைப் பண்ணி சொல்லுங்க சார்.
ரெண்டு பேனல்
அப்படியே அந்த பேனல்ல இல்ல கிரிட் வியூ பாருங்க. இல்ல அந்த பேனல் ஸ்வைப் பண்ணி பாருங்க.
ஸ்வைப் பண்ணாதான் சார் ஸ்கிரீன் தெரியும்.
வரலீங்களா?
அப்போ மேடம் இதுல
இது பாரு. இது கொடுக்குறேன். இது கொடுத்து பார்த்தா
இல்ல மேடம் இப்போ நீங்க இந்த ஸ்கிரீன் ஸ்டாப் பண்ணுங்க மேடம். இது ஸ்டாப் பண்ணுங்க நான் சொல்றேன்.
இப்ப தெரியுதா? ஓகே.
அதான் சொல்றேன். அந்த போர்டு வேற போர்டு.
அதான் இப்போ நீங்க ஸ்டாப் பண்ணுங்க.
இப்ப தெரியுதுங்களா? சரி ஓகே.
ஸ்டாப் பண்ணிட்டு க்ளோஸ் பண்ணிடுங்க. க்ளோஸ் பண்ணிடுங்க. டோட்டலா க்ளோஸ் பண்ணிடுங்க. நோ கொடுத்துருங்க.
நீ என்ன திரும்ப எழுத வைக்க போறேன்.
என்ன மேடம் கொஞ்சம் ஸ்டார்ட்
இப்போ
இந்த வைஸ் கொடுத்துருங்க.
ஒரு
இப்போ ஸ்டார்ட் பண்ணுங்க.
இப்போ ஒயிட் போர்டு தெரியுதா? எழுதாங்க பாருங்க. ஓகே சூப்பர்.
இது என்ன போர்டு? அது என்ன போர்டு?
இது வந்து ஜூம்ல இருக்கு போடுங்க. இது வந்து நம்மளுடைய அப்ளிகேஷன்.
பாப்பா இது கூட இருங்க. ஒரு 5 நிமிஷம் இருங்க. தான் நான் கூப்பிடுறேன். I think whatever has been written so far was not visible, right? So I'll write again whatever I had mentioned so far. The first thing what we did was about circular flow. The second thing what we did was about the measures. The third thing what we did was about the methods. In case of the methods, we have done 3 methods: income, expenditure, and product method. According to the product method, according to all the 3 methods, we have studied both domestic as well as national income. According to the product method, we have studied GDP at market prices and at factor cost, NDP at market prices and at factor cost, GNP at market prices and at factor cost, finally NNP at market price and factor cost. And we have called NNP at factor cost as the national income. In general, what you see in the newspaper will be GDP at market price or GDP at factor cost, because we generally consider GDP as a bigger value than the NNP. And you know the difference between the GDP and NNP. One, the depreciation they would have minus. 2, they would have added on with the net income from abroad, which is your NIFA R minus P. So what they would have minused for making this gross into net will be bigger than what they will be adding for making the domestic into national, which means the depreciation value will be bigger than the NIFA, and therefore the value will look as if like the GDP is bigger actually than the NNP, because NNP after removing the depreciation the value becomes lesser. So for these practical reasons, government always reports about the GDP from the newspaper. They don't write NNP because NNP is a word which you will be hearing only from the classroom from us. Usually NNP is not a commoner word which you are going to see from the newspaper. And now we want to say 1 or 2 things which you will be reading about this national income statistics, particularly the word GDP from the newspaper. Then we will go on with all other the practical the discussions about like the further measures of it. One thing what you will be listening from the newspaper will be about the growth rate, right? So GDP's growth rate is a very frequently listened news from the newspaper. You will be listening like now it is like 4% has come down to 1.9%. It is coming down to 1%. So you are listening it in terms of the percentage, and you are always focusing upon the growth rate. So now we have to tell what is this growth rate which we want to talk. Now, when I start talking about the growth rate and the percentages, many of you may be assuming a particular word called as the base year, like comparing it to the base year. In this particular class, I am not going to teach you anything about the base year, because that concept, unless we get into the larger topic inflation, we are not going to touch upon. So right now, reserve your learnings about the concept of base year. Let us just listen as a one concept which we are going to say, that the income which is compared to the previous year. So we are just going to call ourselves as what is the growth rate. If this year I have earned 100 rupees, and if in the next year I am earning 105 rupees, my income is growing by 5%. This is all we have to remember regarding the word growth rate. What is this income, whether I have calculated it according to the base year concept or not, all those things I will explain once we progress with our concepts and then reach the topic of inflation. As of today's class, since you have listened to the bigger word gross domestic product, and you know now what is this GDP according to the product method, and what is usually written in the newspaper will be GDP at market price or GDP at the factor cost. You will be listening about the growth rate of this GDP, and what is this growth rate? This growth rate is compared to the previous year, how much have I increased in the current year? That is all. So this increase is represented in percentage, and this percentage is what you are seeing in the newspaper. So that's one information which we will have to remember after learning the GDP. So now that we have reached up to here, like all the methods and the measures are over, we are going to learn some more concepts which are related to the GDP, starting with per capita income, and then we will go ahead and see what are the issues in measuring national income, what should be done, what should not be done. Then we will discuss something called as green GDP, which is very, very essential topic because it is related to environment. And finally, we will also say something about the ICAR. ICAR is incremental capital output ratio. Then I'll tell you like how and all you have to study the same thing, whatever we have studied so far for the mains perspective. So that will be the outline for today's class. The next page. Then so now we will continue with our learning for today's class. Number 1, we are going to study about per capita income. Then we are going to study something called as personal income. Then disposable personal income. Then we will study what are the issues in measuring national income. Then we will study what is green GDP. Then we will study what is incremental capital output ratio. Then we will mention something on GDP deflator, which will be anyways reserved for later class. Then we will write 3 major questions for mains perspective. So in today's class. So this will be the outline what we want to do for today's class. So the first thing what we are going to do is per capita income. So when you listen to this word per capita, you are going to say that the income per person. So how do we do this? And why do we have to do this? And what is the good about the measure and what is the difficulty about the measure? These are the few things. First thing is, how do we measure? First, we measure this as national income divided by population of the country. When I say national income here, immediately your mind should work on NNPF factor cost, right? If you write national income from now onwards, there is only one meaning to it. Technically, we know what is national income. So it should be NNPF factor cost divided by population of the country. If you write anything else in the numerator, what is anything else? Government usually writes only GDP in the newspaper. So say that I want to write GDP divided by population of the country. If this is written, then you have to call the answer as GDP per capita. If you are writing GNP at factor cost by population, you can write the answer as GNP per capita. All that you have to do is you have to add the name of this. If it is only NNP, national income, you can simply call it as per capita income. If you are putting anything else in the numerator, I hope you're all very, very familiar with the words numerator and denominator. For economic students, for math students, for learning economics, it is a very, very important word for us forever. From today's class, get used to this terminology of numerator and denominator. Numerator is what is on the above the line and denominator is below the line, right? So in this case, whenever you change the numerator, right? So when you change the numerator, if it is not NNP at factor cost, if it is anything else, you have to write the answer with the name of that particular thing. GDP per capita, GNP per capita, right? So now that we know what is the formula for the per capita income, let us come back and answer the question, why is it so important? It is important because assume that there are two households. Both the households are earning 10,000 rupees. One household is having 5 members. Another household is having 2 members. So now if you apply this per capita income for these two households, one having 5 members, another having 2 members, the first household's per capita income will be 2,000 rupees because there are more number of people. The second household's per capita income will be 5,000 because there are only 2 people to share the 10,000 rupees as the income. Why is this so significant, right? Assume that you are talking at the country level. You're talking about India, you're talking about Sri Lanka, Nepal, Bhutan, US, Germany. So you're talking across the world. And assume that 2 countries become equivalent in terms of the national income, whatever they have declared. But can we say that both these countries are in equivalent level of like the economic growth or economic development? I'm going to tell you about the difference between growth and development soon. But at least let us say that whether these 2 countries are in the equal standards because they are having the same level of national income. We cannot say that with confidence because the number of people who are there in the 2 different countries and how many of them are there to share that national income matters the most, because a household with 5 people is largely in trouble than the household which is with only the 2 people, because you will have only lesser income in hand per person if the population is high. So it is not a big thing just to earn the income. You have to see that how many people are available in the country to share that income. So that is the significance of this per capita income. So you wouldn't have seen in the newspaper, except in a very rare condition that India is earning more than trillion as a national income in those kind of extreme situations. Generally, it will be as such that you don't write the national income or million or billion numbers in the newspaper. You quote mostly per capita income, like how we are talking about GDP and its growth rate mostly. Similarly, we are going to talk about the national income in terms of the per capita income, because per capita income is much more meaningful than the total national, right? So per capita income is the measure which is being compared between the countries across the world. It is not the total national income which is being compared across the world, which you are going to sooner learn through the Human Development Index also. We are going to show you the measure where you will understand how important is this per capita income. Right, we have said about the formula, we have said about the importance. This is required for the comparison internationally, that we have mentioned. Now the third question. Let me say that per capita income of Indian, anybody has any answer, you can type it out. Usually we ask this out in the class when we meet the students. Anyone has any idea about how much is the per capita income of an Indian? Or rather, you can say that, actually if you write this formula, no, this, you can write it like this. Sigma x by n, right? What is the sigma x by n? Sigma means addition. What is this x? Income of all the people in the country. So add up income of all the people and divide by the n, which is the population. So mathematically, this formula is arithmetic mean, right? So now we are going to say that I have calculated the mean income for the country and I have declared this as a per capita income, right? So anybody has any answer to say that this is what is the per capita income of our country? Which means one person, 1 year, on an average in India, how much are we earning? Anybody wants to answer? You can type, I will be able to see. Anybody wants to answer? Is there a chat box? Is there a chat box? Anybody answering? Wait, I can't see the chat box. Okay. Not in terms of dollars. You can present it in terms of Indian rupees. Don't get into dollars. Dollars discussion we'll do later. One person, 1 year on an average. I'm seeing varieties of answer. Somebody has recently answered it as 1,50,000, 1,35,000. Don't check Google and then answer me. Right? It is around 1,30,000 or 35,000. Right? So in this case, now we will go back and ask ourselves, are we all earning 1,35,000 per person? Is that true? Can we say that that is true? No, we can't say that. We can say on an average, this is what we want to earn, or we want to say that this is what one Indian is earning per person per year. But is it true? It is not true. Why do you want to pose yourself with a number which is not true about the country to the rest of the world? But that's what is the number what we have in our hand, because we assume that everybody is equally earning, which is not true, but that is what is the number which you want to say internationally, compare India with the rest of the world, that this is what is the per capita income of an Indian, right? So one way we accept the average with the limitations. Yeah, there are lots of people who are minors, who are unemployed, who are dependents. There are people who don't earn anything. There are beggars in the country. There are people who are like Ambanis who are earning billions and millions of money. So there is a huge difference in the income earnings. But we tell to the rest of the world that 1,30,000 or 35,000 is what is the per capita income of Indian when compared to the rest of the world. So we have to accept the limitation, and we should also keep up the merit. Both these things we have to do. So what is the limitation? First thing is, I don't want to accept that this is the true number, but I still want to say it out. Why do I want to say it out? Because that is the only way how you can represent the standard of living of the country. Or that is the only way how you can say that the demography is actually ruling the economics. Whatever maybe you are earning, however much you are earning as a country, whether the country is going to progress or not is going to be depending upon the denominator. What is the denominator? The population. So the question in the mains examination also, they have asked in several years how the demography is dominating economics. So this is the best way how you can represent like how the country's development in terms of the population affects the economy as such in the whole, right? So that's why we are going to say that I think when I ask a question, if you answer, that is fine. After that, we'll get back to the discussion. The intention is not to disturb anybody. It is only to say that to get some conceptual clarity and a bit of participation from your side. So when we ask the questions, you can type, right? So then limit yourself to the discussion. So we have said a few things about the per capita income. Number one, what is the formula? In the formula, how all the numerator could be different. Number two, when you are doing this, the importance of it, how you are going for the international comparisons. Number three, what is the limitation of it? It is the arithmetic mean. You take the minimum value as well as the maximum value and divide it, add everything and then divide it by the population. So it is not actually true of what is there in the country, but you want to represent this only because this is where your population has, or the demography is going to talk about the economics. You can't just say that I've earned so much when you have so many people in the country to share the so much of the income. So the standard of living or the quality of the living is all going to be depending upon the denominator, not only upon the numerator. So to express all of these concepts together, we are mentioning all the merits and the demerits and the formula for the per capita income. Right? So that is about per capita income will be repeatedly coming. I'm going to talk to you about the per capita income in dollar terms when we get into the next topic on growth and development. As of today's class, we have just introduced this as a concept. In the next class, you will be seeing the application of how this per capita income is going to be used for the measurement of the human development or for the developmental, right? So once we have done this, now let us get into the we will get into the second aspect, which is called as the personal income. Right? I'm doing it here so that we will have the overall picture of the class as well as have this. Where is the pen? Messages and it's the chat. Ma'am, little bit slow.
Post only post only the option click
இப்போ வந்து மெசேஜ் இப்ப பண்ணா
நமக்கு மட்டும் தான் வரும் உங்களுக்கு டிஸ்டர்ப் ஆகும்
பாக்கி இருக்கவங்களுக்கு
மெசேஜ் போகும்
நம்மளுக்கு மட்டும் தான் வரும் ஓகே சோ நவ எனக்கு பென் எங்க செலக்ட் பண்றது இங்க டெக்ஸ்ட் போட்டுட்டேன் பென்சில்
அது டெக்ஸ்ட்ல தான் இருக்குங்க டெக்ஸ்ட்ல போய்
இல்ல ரப்பர் எடுத்தேன்
ஃபார்மட் இருக்குமா ஃபார்மட்ல போய் கலர்
எரேசர் பண்ணிட்டேன் பென் எங்க செலக்ட் பண்றது
அதான் டெக்ஸ்ட்ல போயிட்டு இந்த ஃபார்மட் இருக்குனா கலர் சூஸ் பண்ணுங்க எரேசர் மத்த நீங்க டெக்ஸ்ட் கலர் என்ன நீங்க சூஸ் பண்ணுங்க ஏய் பண்ணுங்க
டெக்ஸ்ட் பாக்ஸ் குள்ள வருது
எடுத்துக்கங்க டெக்ஸ்ட் டிசேபிள் பண்றீங்க டெக்ஸ்ட் டிசேபிள் பண்ணிடுங்க
பென் இங்க ஒயிட் போர்டு இதுல எடுத்துக்கிட்டோமா ஆஹா இதுவெல்லாம்
எடுங்க மேடம் ஒயிட் போர்டு எடுங்க
ஜூம் ஒயிட் போர்டு போடுச்சு அது
மேடம் அது கொஞ்சம்
என்ன இது செலக்ட் பண்ணுறதுன்னு சொல்லுங்கப்பா
இது வந்து ஒயிட் போர்ட் டிசேபிள் பண்றீங்க பெருக்கா மாத்தி
இது பண்ணியாச்சு இந்த பென் வந்துச்சு வந்துச்சு
ஓகே
வேணா அந்த ஒயிட் போர்ட் மேல கிளிக் பண்ணிட்டு திரும்ப வந்துட்டேன்
அது எரேசர்
So now we have the second concept, which is upon the personal income. In terms of the personal income, I request all of you to now remember the calculation of national income according to the income method. If you recall back, we have studied the income method, expenditure method, and product method. I'm requesting all of you to remember the national income now according to the income method, because I'm going to start with the formula according to the income method and then finish writing it. I'll tell you the significance. I'll tell you the meaning of each and every variable what is being written on the board. So first thing is you have to add the transfer payments. Then you have to minus the social security contributions. You have to write the undivided profits. Then you have to minus the after this, disposable personal income will be personal income minus direct taxes, which will be usually income tax. So you just write down the formula. I'll tell you the meaning of personal income, disposable personal income, and the significance of each and every variable. Personal income is something like, assume you would have heard the word take home pay. Take home pay means how much income are you getting in your hand finally when you go back to home. Maybe you will be getting a salary, but there will be lots of deductions. If you are a salaried person, whatever I'm telling, you will be able to understand it. So basically, what is the final amount which is what I receive in my hand for the purpose of consumption. So for the purpose of consumption is where you will reach with the disposable personal income. So for some time till we finish our discussion, please remember this word take home pay. How much are you going to have in your hands, which is what we are going to call as the personal income. Personal. I am going to get this much amount. So how do I get this personal income? I am asking you to assume the national income according to the income method. I've already told you this basic essential. If you go back and think back, what did we do in the class for the income method? You would have had this rent, salary, wages, interest, profit, operating surplus or the mixed income. These are the things which you would have added according to the income. And now what we are going to tell you is, assume that this is a classroom and I have 4 different types of people. One is this salaried people, right? Then the people who are actually employed. So the employers, the employees, right? Other than these people, we'll also have some people who are like dependents and people who are unemployed. So there are different sections of the society. I'm not talking about the minor, but I'm talking about the people who can work, but are they working or not, and what are the different sections of the society. So we are talking about the income generation. So we are talking about the population who can actually get involved in the income generation. In that, I am telling different types of people who are there in the society. One, the employees who are working in an organization. Number 2, the employer who is employing all these employees, the management side. Number 3, there could be dependents like the elderly people as well as the children. But here we are mainly looking at the elderly people who still can earn, but because of their age, they don't earn. And then we also have a 4th category of people who are called as unemployed, who don't find a job to do, but they are also part of the working population of the society or the economy. So when you look at all of these people, what is the income that they have in their hand, which is called as a personal income. Personal income means finally how much income do I take home for the purpose of the consumption. So that's what is going to be the exact meaning of the word disposable personal income. So now we'll tell first what is personal income, then we'll go to the disposable personal income. So first what we are going to deal with is, when I'm mentioning this transfer payments, you have to think about 2 sections of the society whom I have mentioned. One will be the dependents, 2 will be the unemployed. So what is this transfer payments? Transfer payments. Somebody is transferring a payment to somebody. Who is this somebody who is transferring to somebody? The government is transferring sometimes some money to the people. How and what is the mode or the mechanism by which they will transfer? Say for example, I am a dependent. I am like aged above 60. I have worked for so many number of years and I'm getting now pension. So the pension is the amount which is transferred by the previous employer or the employer to whom I was working, and this is transferred by the government to the people. So pension is one type of transfer payments which you can mention as an example. The other thing is, assume that I was not part of any organized sector, so I'm not getting any pension. But even then, you may be getting certain amount which is called as old age allowance. If you see, even in Tamil Nadu, if you have a ration card and then if you go and get yourself certified with the Tahsildar, in this particular region you are living and you are aged above 60, they are giving you some amount which is called as 1,000 rupees per person per month. So transfer payments. The government is supporting people in the form of transfer payments when you are aged and when you're not working. Maybe you are getting pension or you are getting the old age allowance. And then there are other examples, like for the unemployed people, you get some amount which is called as unemployment allowance. Assume that I'm unemployed, but I have registered myself with the employment exchange and still I have not got into any job. Then also the government is going to give you something like 1,000 rupees per person as a supporting mechanism per person for the unemployed person. So if this is all there, so these are all things which are going to be transfer payments. And you're going to see that I have put to one thing called as add. In the national income, it should have been included then, but it was not there. Why it was not there, we will tell one thing. First, understanding about national income is, I think I mentioned to you about the concept of financial year, right? Which is like April 1st to March 31st. Apart from that, you have to now understand that whatever economic activity you do in a particular financial year, the amount which is generated due to the economic activity in a financial year only will be added. That is national income. I think I told you very clearly what is financial year, and I have also told you national income is earned due to an economic activity, right? So when you say you are earning through an economic activity, okay, I'm going faster, I'll become a bit slower. Okay. See, what we are trying to say is, we have said about the 4 sections of the society. I think I was very clear in mentioning the names of them: employees, employer, dependents, and unemployed. Now I have taken this for discussion the first word, transfer payments, in which 2 sections of the society I have picked up. One is the dependents, 2 is the unemployed people. How these people are getting income, because we are talking about personal income. What is a take-home pay? You must be wondering. For the dependents, of course, there is pension. But if they have not worked with the organized sector, what could be their personal income? This 1,000 rupees, whatever the government is transferring to them as a payment, can be taken as a transfer payment. And for the unemployed, the name itself says that he is unemployed. Then how come he will get income? That's where we said that 1,000 rupees, which again the government is getting through the employment exchange if they have registered. And if they have not got into job so far, so we give them some supporting methods. So all of these concepts you are putting under the title transfer payments, and what are you doing to the transfer payments is, you are taking the national income and you are adding it. Are you seeing the symbol plus over there? And now we ask ourselves, why are we adding this? Have I not having a complete formula already? What is my complete formula? I have rent, salary, wages, interest, profit, operating surplus, mixed income. All of these things are already there. What is that I am adding newly through this word transfer payment? Why am I adding? I told you what is transfer payments. What are the examples? 2-3 things I have given you. And if this is the answer, why am I adding it? Now we have to tell the logic. Why am I adding it? We'll tell the logic. The logic is, when you are writing this word national income, this national income is calculated for a financial year. Number 2, for all the economic activities which are happening in the financial year. Happening in the financial year. Now, you tell me, pension is a word. This pension, is it for working in the current year, or I have worked for 30 years, now I have retired? That's when I get the pension. So when I get the pension, it automatically means that I am not working in the current financial year. This pension is received for whatever economic activities I have done in the previous years, 20 years, 30 years, 15 years of my work. So for my previous year financial activities, now I am getting an amount, which is why originally this amount was not added in the national income, because my national income says that for the current financial year, whatever economic activity I am doing and the income generated out of it, that alone I will consider as the national income. So I was not including pension then, but now I'm doing something else. What am I doing? I am a dependent. I am 60 years. Pension is the only amount what I receive in my hand, and this is my personal income. This is the only income what I get in my hand. So I'm going to add this amount to the national income to make the national income into personal income. Am I clear? Similarly, we add the unemployment allowance, old age allowance, pension, all of these things in the name of transfer payments to the national income, because these were not added before, because national income is only for the current financial year. But now we are talking about a concept called as the take home pay. So for the pensioners, for the unemployed, this is the only amount which is there in their hand. So I am going to now add this into the national income. So the first addition of the transfer payments has been explained. Now we will go to the second variable, which is called as a social security contributions. For this, I want all of you to get into the second. Don't get into any kind of other method income generation. I told you not to assume expenditure method or product method for this calculation. I have requested all the students to keep only national income by income method. The discussion doesn't get extended to expenditure method or the product method. And if I write FY, this is called as the financial year. I hope you all know what is financial year. It is extending from April 1st to March 31st, right? So now we get into the second part of the equation, which is about the social security contributions. Now I request all of you to go back to the, out of the 4 sections which we were discussing, employees, right? Let us take your own example. Tomorrow you're all wanting to become into civil servants. Let us assume you are going to become an IAS officer. Generally, we ask the students what will be the salary initially which they will be giving you when you become an IAS officer. You have any answer to say? You can post, right? Anybody knows how much a salary you are going to earn when you are becoming an IAS officer? 55,000, 56,000, 40,000, 70,000, 60,000. Okay. So there are lots of numbers. Fine, fine, fine. Right. So take home and all we will tell right now. So let us say like 1 lakh and all is very ambitious. People don't be very ambitious that you will get 1 lakh in the beginning. Let us say it is somewhere between 50,000 to 60,000. So for an example, let us take the number 60,000 rupees. The 60,000 rupees, which is the salary, which we have already mentioned in the national income, this data, because you would have added rent, salary, wages, interest, profit, all those things. Now I'm going to pick up this word salary, and it would have been written as 60,000, because according to the income method, you would have reported your salary as 60,000. But now the question is take home pay. Are you going to take all the 60,000 back to your home? Is it possible for you? It is not possible. So then what else is happening to this income? They will be reducing the provident fund. They may be reducing some health insurance related money. They may be reducing some house rent allowance. So there are lots of deductions which they are going to do, which is what we want to call as a social security contribution. Right? So if you are contributing towards insurance, or you are contributing towards the pension fund or the provident fund, all these things will be deducted. Say for example, 60,000 is your salary, but finally you will be taking only 50,000 in your hands. So now you have to minus that 10,000 rupees, which has been dedicated in the form of social security contribution. So that is why now you have to look at this formula like this: national income minus social security contribution. Everywhere when I say about this formula, you have to look at like this: national income plus transfer payments, national income minus social security contribution, national income minus undivided profit, national income minus corporate profit tax. So every variable you relate it to the first variable, which is the national. So now when I say national income minus the social security contributions, why am I minusing it? Because though you have declared 60,000 as your salary, you won't be able to take 60,000 to your home. You will be able to take home only 50,000. So that 10,000 goes as the social security contribution, and it is not reaching your hand, which is not coming into your hand. I am going to minus it from the national income, which is why I have written national income minus social security contribution. Right? Have we followed what we have said? Why are we minusing it? And why did we add transfer payment? So for every variable, you have to give a justification. So now we have mentioned about the employees. Slowly we are moving towards the last section of the society, who are the employers. Right? For discussing about the employers, I will give you an example from our side. And whatever numbers I'm going to quote to you right now will be a hypothetical number. You should not be assuming that they are true and then start probing into it. So let us take this only for an example and then have the answers. Assume we are the employers, in the sense the management, and assume that there are 2 people in the management. What is this chat box? Okay, all your doubts, finally I will answer. Of course, where will they use? Right, later, all the questions. Let me finish the formula in completion and then I will answer your questions. So now I am talking about the 4th category of the people, the employer. Assume that this is a company, it has a management, it employs employees. I told you about the employee story. They earn the salary, but there will be a social security contribution. So we are going to minus that out of the national income. Now it comes to the story of the employer. There are 2 people in the management, and now the employer's personal income should also be understood, right? So let us assume that 1 lakh rupees is the fees what we have collected from you. At the first cut, we have to pay the service tax. So let us say like 20,000 rupees has been deducted. 80,000 is the total income. From where we have to start talking about it. All the numbers what I'm quoting is only for the example purpose. So we're not getting into the interrogation. So let us say that 80,000 is the total fees with which we are starting to run the educational classes. Out of which, let us say like we are paying to the faculties as the faculty fee, and then we are giving for the mentors, we are paying the electricity bill, we are paying the water bill, we are paying for the rent. There are lots of running expenses, and after paying out all of these things, out of the 80,000, let us say like 30,000 rupees is remaining back in the hand. When we come to this 30,000 rupees, now there are 2 people, and here you're going to do 2 things. One, for the 30,000 rupees, you have to pay the corporate profit tax. What is a corporate profit tax? If my company is earning some amount as a profit, you have to pay like 30% of it as a corporate profit tax, which we are going to learn anyways in the next class in the public finance. The types of taxes, how much do you pay, companies, individuals, all those details we'll tell you again. Right now, what we are saying is, I'm telling you some number. We started with 1 lakh, 20,000 we paid as a service tax. So I'm starting with the number 80,000. Out of the 80,000, 50,000 has been spent for the expenses. What I have in my hand is 30,000. For this 30,000 also, I have to pay the corporate profit tax. So that amount I am minusing. So now what I have in my hand is 20,000 rupees. Right? Are you saying this word corporate profit tax here? Right? So out of the, now I have to divide the profit among the 2 people who are there in the management. So I'm slowly narrowing down to the concept of take home pay for the 2 people. But out of the 30,000, 10,000 is gone for the corporate profit tax. I have 20,000 in my hand. Out of this 20,000 also, I am going to keep aside another 10,000 rupees as the undivided profits. Why am I setting aside this 10,000 as undivided profits? I am going to make use of this for the future expansion of the company next year. Maybe I want to hire one more hall. I want to put in one more projector. So I'm keeping it aside as an undivided profit. Will all the companies take and set aside the undivided profit? It may not be true. Maybe every company will have a policy of its own. It will say like 10% of whatever I get as a profit, I'll set it aside, or 15% of it, or 5% of it. It depends upon the policy of the company. But some amount I'm taking and keeping it aside so that in the future I can make use of this money for the expansion. And don't go back into your mind to the operating surplus as the concept. That's for the day-to-day expenses. What I am talking here in terms of undivided profits is for the future bigger expansion. I have given you very small numbers for understanding. Please don't go and mix up this concept with the operating surplus, what I told you already. This is not that. This is a larger amount because we are going to talk about the profits of the company. Out of the profits, net profits, we are setting aside money. So this will be in thousands and thousands. Operating surplus will be usually smaller amounts for the company for every day-to-day expense. Right? So now what we have done, after giving off this undivided profits, after paying the corporate profit tax, what I have in my hand is 10,000 rupees. This 10,000 rupees will be divided among two of us, and both of us are going to get 5,000. So there, up to there, it is a concept of the personal income. But I'll extend that personal income into the disposable personal income, where you can see the income tax, right? In that case, for that 5,000 rupees, what you have received as your amount, you will have to pay finally the income tax, right? So, which will become the disposable personal income. So, finally, after paying the income tax, what amount is left back in the hand of one person, which is the employer? That will be the personal income for the employer for the purpose of consumption. So now you have to be very, very clear in your mind with the two keywords, personal income and disposable personal income are taking you towards the concept of how much amount are you left back in your hands for the purpose of consumption. And if you people are thinking about, I am paying corporate profit tax for 30,000 rupees, and again that 5,000 rupees which reaches into the individual hand, again I am paying income tax. Is it not kind of a double taxation? Please don't assume like that. When we are calculating the corporate profit tax, they will be calculating the remuneration as an expense. After removing the remuneration only, they will be doing the corporate profit tax. So here, just for an example, I kept on going on reducing the numbers. Remuneration to the managers will be taken as a expenditure, and for the rest of the amount only you will be paying the corporate profit tax. And finally, when the remuneration comes into the hands of the managers, for that amount you will be paying the income tax. So they are different layers: service tax, corporate profit tax, income tax. After paying all the varieties of taxes, what amount is left behind in the hand of one person as the manager, and there are two people in the management? That amount only we want to call it as the personal income for the manager, for one person. So what is the attempt to through this particular formula, starting from personal income and then ending up to this disposable personal income, is totally we want to understand how much amount is left behind in the hands of the people for the purpose of consumption. I can move this consumption. So this is what we want to understand for the purpose of the consumption. And why are we doing this? You can see that personal income is a concept of take-home pay. And why are we so much stressing about this consumption? I think I already told you, consumption is one of the important activities of the economy. Now you just assume you have studied circular flow and you have learned so many things. We have started with the concept of business sector, which is with the production, and we have said household sector, which is about the consumption. For a moment, bring the circular flow in front of your eyes and then tell to yourself, what if the household people don't consume? I don't want to buy dresses, I don't want to buy vegetables, I don't want to buy fridge, I don't want to buy TV, I don't want to buy mobile phones, I don't want to buy two-wheelers, four-wheelers. What if the household sector stops consuming? Just imagine the economy for a moment. When you do that, when the household sector doesn't consume, the production sector cannot produce. There will be stagnation. You will produce, but people will not buy. If you if you produce, people don't buy, what will happen? The participation of the household in the production will also become difficult, right? Employment will be affected, income will be affected, savings will be affected, investment will be affected. The whole economy will be affected if people don't consume. So consumption is a very, very important economic activity. I think we already mentioned India as a consumption driven economy also, right? So what we are doing through these two formulas is looking at India. Now look at a macro perspective and look at India. Fine, India has earned 1000 rupees as the total national income. But how much income of this national income is actually reaching their hands in the form of personal income? It should be somewhere at least like around 800 rupees or 850 rupees. You should not be taking away major amount of it in the form of other social security contributions or corporate profit tax, or you shouldn't set it out as undivided profits. We want that amount to reach to the hands because people should be having enough amount for the purpose of consumption. Unless you do a proper consumption, the economy will not be vibrant. Economy will come to a depression or to a stagnation if consumption as an economic activity is not happening properly. So to give undue weightage or the importance to the purpose of consumption, we are looking at these two formulas called as a personal income and the disposable personal income. And we have done activities which we wouldn't have done when we were calculating the national income. But it is essential for us to understand this and to arrive at the personal income. Personal income will also be in millions and billions of rupees as the national income, but after the additions and the subtractions. So that's the purpose of learning the personal income and the disposable personal income. So we have learned about like the three formulas which after the methods of national income is to be learned, right? Disposable personal income is for the employers for everybody, whoever is like doing the income tax payment. For everybody, we are going to say here. I chose the example of employers towards the end, so I told that mathematically it's putting the numbers is difficult. So disposable personal income is not only for the employers. Even if the employees are going to pay the income tax, that actually they could have integrated this minusing of the income tax into the personal income also, but they wanted to show that word disposable, which is finally available for them in the hands for the purpose of consumption as into a separate formula. Actually, corporate profit tax is also a type of direct tax only. Income tax is also a type of direct tax only. But they have kept this corporate profit tax directly into the formula of personal income and went ahead with one more step for minusing the income tax, another type of direct tax, for arriving at the disposable personal income. Right? Disposable personal income, yeah, mostly it will be for the organized sector people. Yeah. So now we will move on to the issues in measuring national income. We also have some commoner points from the presentation, but before that I want to tell you like what should you do, what you shouldn't do when you are calculating the national income. Then we will move on to the issues in measuring national from the presentation. First is you have to consider only newly produced. right? Which means like we should not consider the second-hand goods. Second is current financial year alone you have to take, which means that we should not take the transfer payments. Transfer payments is taken only for personal income, not for national income. Third is when you are talking about land, there is a specific consideration what you have to do. Two things. You are not supposed to take empty land, but you can take the newer constructions. And fourthly, you have to include whatever is taken for self-consumption. So these are all, some of them you know by now. One or two more points we want to add. I am trying to now summarize after. Wait, I'll tell you about all of these points. Corporate profit tax and undivided profits are only from the employer's perspective, not from employees. Employees will get only the direct tax, which is your income tax, right? The differences now I'll tell you one by one. One or two of them you already know. We will summarize this table, whatever I have written on the board. One is newly produced. I think I already told you whichever good which has been newly produced in this current financial year. These 2 points are like go hand in hand. Assume you are in this financial year, April 1st, 2020, and you are going up to March 31st, 2021. What are all the goods which are being produced in this current financial year, which are newly produced, that alone will be taken into consideration while calculating the national income for this year. What is this example of the second-hand goods? Say, for example, you are having some two-wheeler which you are buying. Assume you are selling your two-wheeler to me. This two-wheeler was originally produced in the year 2017. So after making use of it for the 3 years, now you are selling the two-wheeler to me. Here there is an economic transaction happening. So then you will be asking whether I should be including this economic transaction into the calculation of national income, because we are doing this calculation in the current financial year. That's not the thing what we have to do. If I buy a new vehicle in the current financial year 2020, which has been produced after April 1st, and I buy it, then that is a new transaction which I have to include in this year. But I don't include the second-hand good because in 2017 year, they would have included the value of that particular two-wheeler which was produced as a new commodity in that particular year. Here, it is only a name transfer from your name to my name. So it is not a new value addition to the country's national income. So though there is an economic transaction, we are not going to consider this for the calculation of the national income. So that's the first thing. So all the two-wheelers or the four-wheelers, second-hand goods, whatever you buy, it is going to be considered only with the word name transfer. It's going to be only with the word name transfer. It won't be taken as a new economic transaction. So in that case, this will not be considered for the calculation. The second thing what we have written on the board is the current financial year. So that also I think I told you. That's why we don't want to include the transfer payments. Transfer payments means pension you may be receiving as a dependent, as an old age person, but that is for the financial activities or the economic activities which you have done in the previous financial years. You are not working currently in the current financial year. Unemployment allowance, old age allowance, all of these things you are receiving in the present year, which we have included in the personal income, but you are not supposed to include all of these things in the national income, because national income wants you to consider only newly produced as well as whichever is being produced in the current financial year. right? So those are the 2 points which you already know, but we are reiterating. The third thing which we are going to talk about is the land. In economics, we call land as nature's gift, right? Imagine yourself, you have even started with your geography classes. Can you produce a piece of land? Anybody can produce, right? Maybe some countries are wanting to find out some newer islands, artificial islands they want to create, and then they want to say that they have produced newer land. But that's not the answer what we want to say. Generally, nobody can produce a piece of land in this earth. So we are going to say that land is a nature's gift, and it comes with no cost of production. You don't have to incur anything to produce, because you can't produce a piece of land. So assume that there is a vacant piece of land here in Anna Nagar and you're going to buy it from another person. Whatever is this transaction will be taken equivalent to a second hand good, because what is there in the name of another person is going to come into your name, right? So empty land, if you're buying, it will be treated as a second hand good. Whereas when you are constructing a building in that empty land, and then apartments or buildings or anything is being bought and sold, that will be considered as a newer transaction, and that value will be included into the national income calculation. But if you are selling something as an empty land, vacant land, that will be treated as a second hand good, and it will be taken only equivalent to the name transfer, right? So that is about the land. And then the fourth thing is about the self consumption. Assume that I am a farmer and I am producing like 50 kgs of rice in the current financial year. I keep 10 kgs of rice for the consumption of my household, and then I give 40 kgs for the sale. Now you have to consider this 10 kgs of rice which has been taken for self-consumption, that value also into the calculation of national income. Because if you don't consider that, there will be an underestimation of national income, right? So whichever things which have been taken for self-consumption, that should be given the market value and you have to add it. Otherwise, it is as if the farmer has not consumed anything. See, assume that if I have not taken that 10 kgs and then kept for myself or my own consumption, I should have obviously gone to the market to buy the 10 kgs of rice. So I have not bought the rice, and you are not reporting the 10 kgs of rice what I have taken and kept for myself for consumption. If you don't report this, it is as if I have not eaten anything. I have not had anything. So that's not the truth, and therefore whichever things which all have been taken for self-consumption, which otherwise you would have bought from the market, you have to give a market value for this particular good or the service and add it on to the national income for calculation. So you have to be very carefully dealing with this concept called as self-consumption, right? Sometimes we call this self-consumption value, whichever you are adding to the national income, as imputed value. Imputed value means I would have produced 50 kgs of rice. I gave 40 kgs to the market. I kept 10 kgs of rice for my self-consumption. This 10 kgs of rice, how much it would have costed in the market, I have to put a value, and that value will be called as the imputed value. So these are the things which I have to do when I am taking into consideration the calculation of national income. Now we will move on to the PPT to see like how we can see further issues. Whatever the two-wheeler, whichever you buy and sell, you have to consider the word new. If it is newly produced in this year, and if you have bought for the first time, it is included in the national income. You bought in this year September, and then you are going to sell it off in the month of November, then for the second time the transaction will be only equivalent to a second hand. So that is important. Self-consumption is not only for the farmers, anybody. If I am owning this building and then I am not paying rent, there also I have to put an imputed value for the rent, right? Land is a commodity which is to be taken as a second-hand good if it is an empty piece of land, because you cannot produce the land by yourself. It is nature's gift. So second-hand good is, why do we want to treat the empty land as a second-hand good? Because it is in somebody else's name, some Ramesh's name, it is coming to my name. So it is only a name transfer, right? But if you build a construction or a building in it and then sell it, then it is going to add some more value to the national income, right? Self-consumption is whatever you are taking it for your own consumption, right? If you are a farmer, or if you are an oil seed producer, or if you are a cotton producer, or whatever you are taking and keeping with yourself without giving it to market for the sales, all those things will be considered as things which have been kept for self-consumption. I even gave you the example of rent, right? Personal income is only to understand the concept of how much money goes into for the consumption. That's a separate concept. Major concept what we are learning in this particular class is mostly about the national income. What is national income? What are the measures? What are the different methods? What is per capita income? Per capita income is again constructed from the national income. So what is per capita income, and what are the things which I have to do, which I shouldn't do when we are calculating the national income? I came to this point after teaching personal income because it becomes easier for us to talk about the concept of transfer payments, social security contributions, everything over there, and then come back here so that now you will know why you should include certain things, why you should not include certain things, right? Selling a house will be included in the national income if you are newly building it and then sell it, right? Old, anything which is old will not be taken as a value which you can include into the national income. Imputed value is giving the market value for the things which you are doing for the self-consumption. I gave you the example of farmer, 10 kgs of rice which he is keeping for himself. You have to multiply this 10 kg into 50 rupees per kg, say for example, and put it as 500 rupees. That is the imputed value. You are giving your own value as if you have bought it from the market, as if, assuming that you have bought it from the market. That's your imputed value. Whatever may be the land price, you all may be having a question like, even if it is an empty land, if it is like bought by Ramesh 10 years before and he is selling to me now because there is a value of the land appreciation is happening, whatever may be, if it is an empty land, it doesn't come into the calculation of the national income. That's all you have to remember, right? Old houses and all will not be considered as value to be included into the national income, right? Old houses will not be included. New constructions in that year will be taken, right? Goods produced in a year, one financial year, will be belonging to the national income calculation of that particular year only. So if you are buying 2019 model now, that won't be taken into consideration because according to the product method, already they would have included the value of that particular car or the two-wheeler in 2019 year's national income, right? So that's why I'm very specifically saying current year, financial year, newly produced, no second-hand goods. All of these keywords should be there in the right? National income is basically only thinking about the income generation. It is not thinking about any kind of deductions in it. So what we will, you want to keep the seeds for the next year cultivation, you can impute a value for the seeds what you have kept it over there. It can be a imputed value, right? Is subsidy a part of transfer payments? You can consider them, but anyway, subsidies calculation comes directly into the national income when you are talking about the market prices and the factor cost. So you don't have to do that separately for the personal income calculation. Taxes collected from the land selling also will come into the national income, but they won't take the value of the land asset for the calculation. The profits which have been earned will not be taken into consideration. Taxes will be, of course, included, but not the value. That's how the calculation is being done, right? Yes, imputed value is calculated on the unsold one, which is taken for the self-consumption. That's right. This financial year is from 1920 to 20. You have to take it as April 1st, 2020 to March 31st, 2021. Right, so I'll give you a 5 minutes break now. We are going to continue with the presentation. I'm going to load the presentation and share the screen. From that, we will look at the PPT and then continue with the class. I'll give you like 5 minutes like break right now. Per capita income will be used. You will see it a lot in the newspaper. I'll tell you about the Human Development Index. Then you will start visibly seeing the per capita income usage in the newspaper. Yes. Fine. We'll continue with the things which we need to complete for today's class. We were mentioning about like what are all the things which we have to do and which we should not be doing while calculating national income. And so here is certain general things which we have to remember what is possible and not possible while measuring national income. One of the things is when we are talking about the unorganized sectors, you can see that either if it is by income method or by expenditure method or by the product method, whatever may be the methods, when there is a presence of a larger unorganized sector, I hope we are all familiar with the word unorganized sector. Unorganized sector means like which is not having a registration, it's not registered under any companies or any bodies or any societies or any trust. And you will not have a regular payroll, you will not be having any kind of provident fund, pension fund, any kind of these kind of contributions. So when you are not having a proper structure for the company, so that's when it's not a registered organization, we call it as an unorganized sector. So in these kind of situations, going and collecting the data either about the output or about their income generated or the expenditure, whatever they have done, any of these things will become a difficulty. So therefore, these are considered as one of the major area where the data underestimation is like possible. And then we are looking at data from the small producers, which may also be difficult due to illiteracy. So again, they can also be part of your unorganized sector, the kirana shop, the petty shop owners, the grocery owners. All these people may also be finding it difficult to give us the data because of the levels of illiteracy. And there are certain sections of economic activity which are also going unpaid, particularly when you're talking about a household. And if the mother is capable of transferring lots of skills to the children, say, for example, if you are seeing a mother is singing very well and teaching her children how to sing, and if the children are actually sent outside for the singing class or the music class, it will be a paid activity. But for their own children, when they teach, it will go as an unpaid activity. So the mother can be teaching the children lots of skills, which all will go into a non-monetary economic activity. So here also we are going to say that there is a lot of underestimation of the national income because the value is getting generated, but it is not being paid for it. Then we are having certain costs which we want to call as the environmental or the social costs. Here we can say that when you're talking about national income, it is very much specific about how much goods you are produced or how many services are being produced. But it is not going to be concerned about the pollution or other health hazards, what it has done to the environment. If there is an industry which is making a loud noise, there could be a noise pollution in the surrounding area. Or there could be an industry which is giving out chemicals as the waste stages, which can be going and polluting the water as well as the soil, as well as the groundwater, many of the things in the surrounding area. All these things, the cost which the economic activity is producing, that will not be taken into consideration when we are calculating the national income. But CSO is actually interested in only counting the number of goods which are being produced by that industry. It's not worried or taking into consideration the social cost which that particular industry has given to the surrounding area. So that's seen as like a drawback of the calculation of the national income. And we also have to talk about the quality of life of people. Assume that I'm a person like who is working for 8 hours in a day from morning like 9:30 to evening 6. In case if I am being made to like do the typing or the manual work for another like 3 more hours in the evening or 2 more hours in the evening, one, I am compromising on the leisure, or number 2, my efficiency will have an problem in the next day's work also, because I overworked today and my leisure time has been sacrificed, and because of today's extended work, tomorrow's my routine work can also get affected. All of these things is not a problem for national income. What it will see is, instead of 8 hours, today I have worked for 10 hours, so it will multiply the 10 hours into per hour work, and then it will calculate that particular value as the national income generated for this year. but it is not going to be bothered about the quality of life what I have compromised in order to produce this additional amount of the output. So the quality of life is not being taken into account, the social cost is not being taken into account. And you can also see the last and the very significant point, which is also about the parallel economy. I think when we studied about the different methods of computing national income, we said about the income method and the expenditure method, the first two things. And when we said that when I am generating 1,000 rupees as the income, and when I am reporting as if I have spent like 1,500 rupees as my expenditure, there is a mismatch between the income and the expenditure generated. So we are going to have the logic that I can't be spending without earning. So therefore, somewhere I have misreported my earning, where I have correctly reported my spending. So this is the one of the ways how you can actually find out the quantum or the magnitude of the black income which is being generated in the country. We already said black income is the income which is not reported for the taxation purpose, or which is not actually declared first of all. Whether it is taxed or not is a separate thing, but first of all, you don't tell properly the total value of your income. So that will be the parallel economy. Why are you calling this word black income as a parallel economy? It is because it is becoming as bigger as the original income, right? So when GDP is there for the country, when the black income is also coming closer to the value, we look at it as a parallel thing. If all of this black income is reported properly, and when it becomes into the GDP or the national income, then India's value of national income will look quite bigger. But because of this black income circulation in the country, we are having this parallel economy running, and it is resulting in the underestimation of the national income measures. So that's becoming a bigger problem, which we have mentioned here as a prevalence of parallel economy. We are going to anyways learn about parallel economy again. Here we are summarizing all of these points as measures or the issues which are there in the measuring the national income. So these are all commoner across all the three different methods. I've already told you what is to be done, what is not to be done while doing the measuring of the national income, and what are now the issues in measuring the national income. So when we are looking at the different issues here in the national income, we are going to pick up one particular social cost is something which is social cost is something which is like the pollution cost, which is like you are affecting the environment around you, you are affecting the quality of life around you, but that will not be considered when we are calculating the national income. So environmental pollution cost will be taken as a social cost, right? So this particular point only now we are going to pick up, since we said that there is an industry, assume that there is a textiles industry and it has let out some water, which is pollution, right, into the water sources nearby. So now CSO will come to the textiles industry, will ask how many textiles have you produced or how many output have you produced. But it won't ask for the social cost, whatever it has incurred. So in this case, now we are going to do a particular calculation in order to address this lacunae which CSO is not taking into account. And we are going to call that concept as this concept called as the green GDP, right? As you are seeing on the title, green means we are going to talk about the environmental concerns. So after considering the environmental cost, whatever the economy has caused, you are going to give the answer as the green GDP, right? Right. So what do we do with the green GDP? How do we arrive at it? We have said national income is not considering the social cost. Now there is a chance for us to do it. Who actually started doing this. China as a country which started doing this. And what was the concept behind this? There are two keywords which you have to remember while calculating the GDP. One is called as natural resources depletion cost, which you can see here. The other one is the environmental pollution cost or the environmental degradation cost. So let us say some example to understand this. Assume that you have 10,000 rupees as a calculation for GDP in a year. In a particular financial year, we are declaring that India has earned 10,000 rupees as a national income. But India also has a problem in terms of the natural resources maintenance. Say, for example, we had 200 hectares of forest in the previous year. 20 hectares of forest we have depleted because we wanted to build some industries, right? In any country, you're going to say that like there should be a minimum percentage of area under forest. 1/3 of the total area should be under forest. 30%. But in India, how much area is there under forest is somewhere around 20 to 21%. So when you see that there is a requirement, but we are lesser than the requirement, and we are still becoming lesser and lesser. Maybe we are becoming lesser, maybe we are becoming better. Now we have to consider the situation of becoming lesser. For the purpose of economic activity, if you are depleting forest, you have to give some economic value to it. I gave you an example. Out of the 200 hectares of forest which was there in the last year, 20 hectares was lost. So what you could do is, for every hectare of the forest depleted, you can put some economic value. Say, for example, 100 rupees is lost per hectare. I'm just giving you some numbers because I've taken only 10,000 as the total national income. I'm putting small numbers here for the value of 1 hectare of forest. So like that, you calculate the value for the 20 hectares of forest, what has been lost, and you go and take this value and minus it from the GDP total value. GDP total value is 10,000. The economic value, what you have lost by the depletion of the natural resources, say for example, it is 1,000 rupees. So you have to now write 10,000 minus 1,000. The answer will be green GDP, right? That's one thing which you have to do. The second thing what you have to do is, the one thing what I have said in the first place is natural resources depletion cost. You have a water resource, you have a forest resource, you have a mountain resource, you have a mineral resource, you have different resources in the country. But for the purpose of the economic activity, if you have depleted them, put an economic value what it would have given if it was not depleted, and go and minus that particular value from the GDP. Right? That's the first thing what you have to do. The second thing is, you're going to talk about the environmental pollution cost. I gave you an example of industry producing textiles, and it is leaving out lot of dye or the chemicals outside, which will be going and mixing with the water resources or soil, and it will be polluted. Now you are going to go and tell that particular industry, you are not supposed to leave out this polluted water. You go and put up an effluent treatment plant, treat the water and leave it out so that it will not harm the economy surrounding. So now I am in a textile industry. I'm going to put up an effluent treatment plant, TETP, treat the water and leave it out. So whatever cost I am incurring in treating the water so that I can leave it out without the pollution, that particular cost will also be minused from the GDP. It is an environmental degradation cost. If I leave out, it will result in the pollution, right? It is very difficult for me to go and see the health related issues or the loss of the value of the commodities or the soil or whatever, the water resources. So what I'm doing is I'm imputing a value. How am I imputing a value or calculating a value? First, if I am the industry who is producing the chemical, I have to treat it so that the water is not polluting when I'm leaving it outside into the from my industry. So that particular value, whatever you are incurring in order to treat it and leave it outside, they will take that particular value and go and minus it from the GDP. Similarly, if you're saying like that there is an air pollution, they have to put in some filters and all, and then they have to spend some money for the treatment of the gases or the smoke before it goes out so that it doesn't pollute the environment. So whatever amount, nowadays we're all wearing the mask. In case if this is due to the pollution, So how much amount are we spending in order to safeguarding ourselves from the air pollution? So all of these things can be taken as a cost to the economy, cost due to the pollution, and minus this particular value from the total value or the income which has been generated by the country, and declare the answer as a green GDP. So after allowing for all the environmental damage which this economic activity has done, I minus those values and then I find out a national income, which is what I want to call as a green national income for the country, right? So when this exercise was taken up by China, there were lots of occasions where they even ended up with some negative values in some of the provinces. It was only to establish the fact that the environmental cost is actually higher than the economic cost or the economic income what they have produced in a particular financial year. And when they wanted to compute the same thing for India, we wanted to do it, but we were not able to complete it mainly because of the want of the data. So first thing is, even if you know like there is a depletion of the resources happening, who will calculate the economic value for 1 hectare of forest or the amount of resources what have gone into the depletion? So the calculation methodologies, difficulties are there, though the conceptual clarity is there. The methodological, the realistic implementation of the calculation was challenging for India. So though we wanted to do it, we did not complete it. But UPSC is very, very liking this concept of green GDP. So at least 3 to 4 times in the mains examination, they have asked about what is green GDP and what are its calculations and how is it being used. Sometimes they also make use of the word green accounting. In the mains examination, they can ask you with the word instead of green GDP, they can ask you about green accounting. Now you know the major title of the class being called as national income accounting. So you are calculating the national income. Similarly, you have to assume that question is being asked about the green GDP or the green income accounting. So green GDP is one of the areas which is very repeatedly being asked by UPSC in several years. Right? So this is an important area. Now we move on to the next slide, which is about the incremental capital output ratio. I'll tell you what it is. Right? Okay. So you have to write this as change in the input change. Right? This delta is, in mathematics, you know, this is change. The title is incremental capital output. Are we clear with whatever we have said so far? We have said about like do's and don'ts of measuring national income. We have said about issues in measuring national income. We have gone into detail of what is a major issue in measuring the national income, which is your the social cost or the environmental pollution cost, which we have done through the green GDP. And now I will talk to all of you about the doubts in the last 15 minutes. I have one more concept to complete for today's class, which is this last concept about incremental capital output ratio. After this, I will pick up all of your doubts. I will answer them, then only leave the class. So please give me another 5 minutes time. By 12:45, let me complete with the concepts what I wanted to tell you in today's class. I have to tell you about last point about green GDP. The last previous slide was about China, right? We were not able to like provinces and all it is written. We call ourselves as states, right? GDP deflator, I will tell you in another class. We can't complete in today's class because first of all, I have to tell you what is inflation. Then only I can tell you what is deflation. Then only I can tell you what is GDP deflator. It is belonging to this class topic, but I won't complete it in today's class. because I am reserving this topic for the inflation to be completed. I already told you something about the growth rate. I told you I am not telling anything about the real growth rate in today's class, because we need to know what is a base year. We need to know what is inflation if we want to study about the real growth rate, GDP deflator, real GDP. They're all related concepts. So we are not yet ready to get into the real concepts. Real is a technical word in economics. Real is after inflation. I've not told you even what is inflation so far. So not in this class. I will definitely recall when we go into the inflation class about this particular topic, GDP deflator, in that class, link it. I think in the first class itself, I told you we are going to go back and forth several times, right, in economics. So we are going to go back and forth as we go ahead with the topics. But in today's class, our agenda is to complete up to ICON and GDP deflator. I wanted to tell you about the mains type question, 3 things. If time permits, I will tell you. Otherwise, next class we start with the mains question. Then we get into the economic growth versus economic development. So that's the second topic. After that, we will get into the public finance, which is about the government. So today's class, we are going to tell this particular concept about ICAR, and I'll tell you what is actually GDP deflator without any formula. We will learn about it in the subsequent class. So now we are going to learn a very important concept which is being repeatedly asked to the UPSC in the examination, preliminary examination. Even in the last year, we had a question about the incremental capital output ratio. So what is this all about? Why do we have to study this? So as we are seeing here from the explanation, we can see that it is basically to measure the technical efficiency, or rather how exactly our capital is working in the country, right? Or our capital's efficiency. That's the purpose of the incremental capital output ratio. I have written the formula here. The formula is to say that how much amount of the input should I increase in order to increase the output by 1 unit. Why do I want to keep it as 1 unit? Because if the denominator is, the change is 1, if you say that the change is 1, it becomes like any number you put on the numerator, you are going to divide it by 1 and you're going to get the same answer. So for the mathematical convenience, we just put it as 1 unit. Say for example, I am producing like the pens. How much more amount should I be adding on in the form of the capital in order to produce 1 more unit of pen? That's one way of looking at it. Or I'll tell you in the macro perspective, if I have to improve the denominator, what is the denominator? The output. What is the output? I want to call it as GDP. Do I want to call the GDP in the terms of like quantity? No, let me say it in the value. You know the definition of GDP. It's the market value of all final goods and services produced in the country in a year's time, right? Now I am going to tell you about this GDP in rupees. How am I going to tell you? If I have to increase the value of the GDP by 1 rupee, how much more rupees should I be investing in the capital? Right? If I have to increase the value of GDP by 1 rupee, which is the denominator, how much more rupees should I be investing in the terms of capital? The capital, what I am meaning here, could be a technology, or it could be a machinery, or it could be a particular equipment. So it is basically to talk about the physical capital, right? So when you're talking about the physical capital, whether it is working very efficiently, how much money should I be incurring more into the physical capital so that I will be producing 1 more rupee of the GDP, value of GDP. So this value is right now something like this, 4 by 1. So which means that if I incur 4 rupee into the capital, I am able to produce 1 more rupee of the GDP value, right? So now we have to ask ourselves a question. 4 rupee I am incurring and I am able to increase only 1 more rupee of GDP. Is it a very good condition? It is not sounding like that. So let us ask ourselves. Should the 4 rupee become into 5, 6, 7, or should the 4 rupee become into 3, 2, 1? Obviously the answer is it has to become into 3, 2, 1, because I want to put 1 more rupee and at least get 1 more rupee as the output. Then only I can say that it is equivalent efficiency. If I put in less rupee and then get 1 rupee, that's a very good situation. I'm not even going into that kind of a very good situation. If I incur one more unit of capital, I should be getting one more value of the GDP. If I'm doing that, that's a very good ideal situation. So that is a thing. What should India do? India should bring down this numerator. We should become into 3, 2, then we should reach 1. That's this point. The lesser the ICAR, more efficient is the organization, more efficient is the country. Right? So in the examination, in several years, they have asked, right, a country which is having very good economic growth will be having very good or very high ICAR. Is the answer correct or wrong? It is wrong, because when you are saying the economic growth or the development or the earning of the country has to increase, it has to happen with the ICAR coming down. Lesser the ICAR, higher will be the efficiency of the country. You should never say that higher the ICAR, higher is the efficiency of the country. They don't go both hand in hand, because for producing one more unit of the or the one more value of the GDP, we want this capital or the investment to become lesser and lesser. We don't want to put 5 rupee and then get 1 rupee. We want to put 1 rupee and we want to get 1. So lesser the ICAR, higher will be the efficiency of the country or the organization. So this interpretation, several years they have asked in the preliminary examination, ICAR, green GDP, they are all very important areas for the preliminary examination, right? So that's the formula, and here we are saying this delta as a change. So change in the input is being taken as a capital, and you shouldn't be changing this formula. This is how you read the title also, incremental capital output ratio. Put the capital in the numerator, you put the output in the denominator and call it as incremental capital output ratio, right? So that's about your ICAR. I think with this, the major things what we wanted to say, we have said about in today's class. The main thing questions I will discuss or start discussing in the beginning of the next class. We had a board. Where was my board? No, in the Zoom there was a board. Where was my board? Okay, I can't see the board. I was writing. Can you see the board what I have opened now? Can you see the board what I have opened now? No. Okay, which means that wait. No, it's gone. Okay. Okay, so what I'll do is I'll get back to my PPT itself. இந்த போர்டு எடுத்து கொடுங்க ஜூம்ல இருக்கிறதுல வச்சு எழுதிட்டு இருந்தேன் நான்.
இது க்ளோஸ் பண்ணுங்க, உங்க போட்டோ க்ளோஸ் பண்ணுங்க.
ஃபோல்டர் எப்படி க்ளோஸ் பண்ணுங்க?
மினிமைஸ் பண்ணுங்க. மினிமைஸ் ரைட் கிளிக் பண்ணி மினிமைஸ் பண்ணுங்க.
அங்க எது ஓபன் பண்ணிருக்கேன். டிரா பண்ணுங்க வருதான்னு பார்ப்போம்.
ஸ்டாப் பண்ணுங்க.
பென்ல இருக்க பாருங்க.
பென்ல மேல தள்ளிடுறோம்.
So after this ICAR we were supposed to அது ஓகே. அது இதுல போடுங்க. கனெக்ட் ஆகல. ஓகே எழுதுங்க. Okay, so we have done ICAR, we have done green GDP, we have done issues. So the 7th point, which is about the GDP deflator, I've already told you, like, we are going to research this topic for the next class, not the next class, the class after I finish the inflation as a topic. So we'll be doing this. The 3 questions, whatever I have said about the mains perspective, I will start with this in the next class, and then we are going to start on the topics on economic growth and economic development, right? So economic growth and economic development in the next class. Before that, I will finish this, then we will start the topic. And GDP deflator, I have not said anything in today's class because I have to first tell you what is inflation, then I have to tell you what is deflation, then I have to bring in the concept which is called as a real GDP. When I bring in the concept of real GDP, I will be making use of the GDP deflator in order to make the GDP into real GDP, right? So this is all linked concept. So once I'm done with the inflation, I will be getting into this concept of the real GDP. In today's class, I have told you only about GDP's growth rate. Whenever you hear to the word growth, you should be comparing it with the previous year. Right? So that's the thing. So whatever we were picking up as the agenda for today's class, we have almost completed except for the last point. The 3 major questions I'll mention to you in the next class. And apart from the 3 major questions, I'm going to also tell you about the mains question we are going to deal in the next class, and I'm going to tell you something on demographic dividends, and we are going to talk something on inclusive growth. So these are all the topics which are related to our current topic, whatever we are studying. Next class will be on economic growth and economic development. You can even finish these 2 topics or this particular thing, then study about inclusive growth. So these are the things which we are going to do in the subsequent class. Now whatever questions you want to ask in today's class, you can ask, and then anybody is wanting to hand raise and then talk, you can talk now so that I can 11 participants raised their hands. எங்க பார்க்கிறது? Hand raise பண்ணுங்க.
Screenshot
ஸ்டாப் பண்ணிட்டோம்.
Screenshot stop பண்ணிடுங்க.
இங்க
இது இருக்கு மேடம், இது ஃபர்ஸ்ட் வச்சுக்கோங்க. நெக்ஸ்ட் டைம்னா ஹேண்ட் ரைஸ் யாரா இருக்கணும் கரெக்டாக.
Okay.
Yes, இப்போ யூனிக் வருது
2082873. I have asked to unmute. 2082873. If you want to speak.
Yes, ma'am. I'm available. Good afternoon, ma'am. Can you see that undivided profits, which if we call it as a reserve, no, ma'am? Can we call it as a reserve? Can we call the undivided profit as reserve?
As reserve.
Yes, yes.
Yeah, you are actually keeping that money, setting aside it for the future expansion of your company. So in that case, you can call it as like the seed money or the reserve money, which you are going to keep it for the future expansion.
Okay. So the operating surplus can be said as working capital, and the undivided profits can be called as reserve.
Yeah, you are keeping it for the future purpose. See, the main idea of talking about undivided profit is it is undivided between the managers. So you're not going to get that money into your hand. So you are removing all the amount which is not coming into your hand, and finally whatever amount you get, that you are dividing between the two managers. In that also, after you pay the income tax, what is left in your hand for the purpose of consumption. So that's how we look at the
And then for computing the, you said as a national income, we exclude the existing buildings. So what about the refurbishment? That is for computing national income. We exclude the existing buildings. Because only newly constructed is.
I'm not able to hear the last word.
That is, ma'am, actually for computing the national income, we exclude the existing buildings. That is the existing constructions.
Yes.
So what about the refurbishments, ma'am, we do for the existing buildings? Example, I'm building another floor for my building. So what is that included in national income?
Whatever is being newly done as a value, we can include. If you are by doing refurbishing or renovation, you are adding one more room, it will be taken into consideration. But if you are just redoing certain repair work, it won't be taken into consideration.
Okay.
That won't be taken into consideration.
Yeah. Okay. Then what about CSR, ma'am? If you are computing national income via the expenditure method, do we include the CSR expenditure?
What expenditure?
CSR.
Corporate social responsibility.
Yes.
Yes, of course, if they are doing for creating some new things, say for example, they are providing some healthcare services by doing a campaign, all those things will be included.
Okay. Okay. We have completed the ICOR, which is input capital output ratio, ma'am. That is ICOR.
Yeah.
So can we call that marginal cost?
No need of calling it as marginal cost, right? We are not going to take the total cost of the country. See, it is basically calculated at the country level. Okay. So there are lots of things which are being done with the instruments. There are lots of things which are not being done. There are lots of technologies, big, small. All you want to call this as is only the incremental capital output ratio. It goes with a specific name for the country's sake. Of course, if you're talking at the firm level, of course, if you're talking at the industry level, you can call it as a marginal cost. But here we don't want to call it because here we are focusing only upon the capital. It is not including all other operational cost or all other. See, in case of your firm or the industry, you will be having the fixed cost and the variable cost. Here it is actually a fixed cost kind of a thing because you're talking about the capital or you're talking about the technology. So marginal cost will be mostly depending upon the variable cost because fixed cost doesn't change mostly for the firm or the industry. So don't bring in the concept of the individual companies thing into the country level. Right now we call this as the change in the amount what you are incurring as the capital, the physical capital or the technology in order to produce one more unit of value of GDP. That's how we have to look.
Okay. And can you name some countries which have got less ICOR?
I can't hear you properly.
Can you name some countries which have got less incremental capital output ratio, that means more efficient productions?
All these developed countries, you can see that the ICAR will be lesser, which will be closer to 1. Maybe you can talk about the European countries, Scandinavian countries. They can have a value closer to 1. We are having it closer to 4.
And we discussed about green GDP. So is that the value of green GDP directly from the national income?
It is not actually the national income. It's an additional concept beyond the national income, because India hasn't done this. India wanted to do it, but we have not done it. You can say,
so if we compute green GDP, do we deduct it from the national income?
it depends on the perspective. Generally, we wouldn't do it, because unless all the countries in the world, they come up with a green GDP, you won't be able to compare yourself with the rest of the world.
Okay.
Right? For us, national income is the thing. All other things, whatever you are doing, is like a value addition to give different perspectives. So that's from the environmental perspective.
Okay. Then this is a primary doubt. What is the difference between the Central Stats Organization and the National Sample Survey Organization, ma'am?
National Sample Surveys Organization, they'll go to the household level. CSO doesn't get up to the household level for the data collection. NSSO data can be taken by CSO for its computation. But CSO does all the macro indicators. You're going to study about IIP index, you're going to study about WPI, CPI. All these macroeconomic indicators for the economy will be done by CSO. Whereas perspectives, like how the migrant workers are there, how is the level of education in the country, how is the level of morbidity in the country, all those things, how is the level of poverty in the country, all those things will be done by the NSSO.
So I believe largely of social perspectives even by the NSSO.
Yeah, mostly with the household survey. CSO will not go up to the household to get the data.
Okay.
It generally takes data from all other places and completes.
Okay. Thank you, ma'am.
2059528. We are asking you to unmute.
Hi, ma'am. Good afternoon. Can you explain whether per capita income is used to predict whether the country is developed or underdeveloped, like that?
That we are going to study in economic development, the next topic, ma'am. We are going to compute something called as human development index. In that, you are going to see the role of per capita income. I have not told you the usage of it yet. We are going to study in the next class. I just told you what is per capita income in today's class.
The per capita income is just the NNP divided by the total number of population. It's the average mean.
Exactly.
Then in second hand issue, I have some doubt, ma'am. Suppose if I buy a car in 2020 June, like that, but the car is produced in 2019 itself, means what I'm buying, it's a second hand car?
It's not a second hand car. The year in which it was produced, that year it would have been included in the GDP value. See, final goods are produced, right? 2019, it will be taken as a final good. So in that year, if it is calculated, it won't be brought into calculation for this year. That's all we are going to say. It's not a second hand good, but the value generated is the important concept for the calculation.
Only for national income, it won't be included in that.
Won't be included. In that year, it would have been already included.
In 2019 itself, it have been included, but not for 2020. Okay. I can get it. Thank you.
Priya, you want to ask anything? Priya, can you?
Good afternoon, ma'am.
Yes, ma'am. Good afternoon.
Where does the service tax will be included, ma'am?
What will be included? Tax
No,
upon?
ma'am. The service tax is there, no, ma'am. The service tax will be included, ma'am.
Service tax is included in that indirect taxes calculation for your market prices and factor cost itself, no? So even inside the value of the commodity itself, you are taking that into consideration.
Okay. Ma'am, the pension, no, ma'am. Will it be taken as social security contribution, ma'am?
See, pension, when it is being
Pension
given,
for the future, ma'am. Pension for the future.
agreed.
If the person is getting the...
You have to understand it in two ways, Priya. One is, Assume that there is an elder person who drove and then they are earning pension. That will be added as transfer payments in the formula. But you are an employee and you are contributing towards the social security contribution. Say, for example, 5,000 rupees is deducted from your salary. That will be written as minus social security contribution. So the same household may be receiving pension. The same household may be contributing to the social security contribution. Whichever is there, fit it in the formula and then follow the sign properly. If you are receiving pension, make it as plus transfer payments. If you are minusing the pension or the contributions, what you do, you minus.
Okay. Yes, ma'am. Ma'am, a house is there, ma'am. It is bought by someone else and it is converted into any hostel or PG just inside alteration, ma'am. So that will be included in the national income.
The income generated will be calculated, but not the amount what they have spent on the renovation. It's a hostel service.
Okay.
That will be calculated,
yes,
but not the amount what they incurred in the renovation of the place.
Okay, ma'am. Ma'am, the pollution control that, no, ma'am, green GDP. If now industry is found to be polluting the surrounding areas, ma'am, and they were not using money for controlling that. For example, the dye industry is letting out the water, chemical water to the rivers, ma'am, and it was found by the pollution control board, and they were be given fines, no, ma'am. Is that is calculated regarding with green GDP? That is the amount.
I think you can calculate, but they have to do the rectification after the fine. No, whatever rectification they're asking them to do the treatment. See, basically, we want to say that you're doing a pollution, agreed, but you have to make it into an unpolluted form. What is the cost which you're going to incur in doing this? That is the cost what I want to minus from the GDP value.
Yes, ma'am. But for example, the industry is polluting for almost an year, ma'am. On that year, they were not doing that cost, ma'am.
Consider that fine.
Okay, ma'am. Is it calculated? Collected regarding that, ma'am.
Data is all there. Data is all there. May not be like uniform across the states. Some states, the pollution control board may be very strict and then they will be doing what they have to do. But many of the places, it may not happen. In that case, it will become like you don't have a data to minus.
Okay, ma'am. Thank you.
2024714. I'm asking you to unmute.
Good afternoon, ma'am. I have 3 doubts because due to the connection I was not able to hear you.
Okay.
Can you please explain briefly about the per capita income and personal income, ma'am?
No, your question is about per capita income or personal income?
Both means per capita and personal income.
The full explanation is going to take time because I have to tell you the formula completely. I'll do it once I am done with the session. Anything else other than what you have listened, if you want me to tell, I'll tell you.
Green GDP, ma'am.
What is a calculation problem, or what is that you didn't understand in green GDP?
Calculation problem.
Calculation is, so you just have to take GDP for a country, and if you have depleted the natural resources, you mean natural resources by the forest, the mineral resources, the water resources, soil resources. So there are lots of resources, and if you have caused a damage to it, you have to minus that value from GDP. That's first thing. Second thing is, if you have polluted the environment, whatever pollution you have caused, and then because of that there is a damage done to the environment. We gave the example of water pollution and how the water pollution should be corrected. That amount which is being used for the correction of the water pollution. I am the industry, I am giving out bad water, but I have to put up a plant and then treat the water and then leave it out. Whatever amount I have incurred in the treating of that water to make it unpolluted, that amount also I have to reduce from the GDP. So two types of cost: natural resources depletion cost and the environmental pollution cost. So you have to minus these two things in order to arrive at the green GDP. Green GDP is environmentally, however I have affected, I have to minus it from the original GDP. So it is a
means minusing the damage environmental causes
Yeah.
with national income, ma'am.
yes, from the national income. From the national income, which we generally call as a GDP.
And then ICOR, ma'am, ICOR, ICOR.
ICOR is basically to look at India and say that how efficient is India in terms of the technology. Are we having very good technologies so that we are able to produce more GDP, or are our technologies not so good, or they are inefficient? Efficiency is when you put in 1 rupee and then you get out with 1 rupee. But if you have to put in 4 rupees and then you are getting only 1 rupee, then it is a bad situation. So for India, it is actually a bad situation. We are having higher ICOR, which is not good for the country. So we have to move ahead to those kinds of technologies which will be having good impact, so that our ICOR will move from 4 by 1 to 1 by 1. Right? So that formula is in the numerator. It is going to tell you how much amount are we incurring in the form of the technologies or the capital cost to the value what we generate as the GDP. Right?
Now we will explain last map that personal income and per capita income.
The full calculation will take some time. I'll just finish for the rest of them. I'll get back to you, or I'll write to you. You wait a minute. The ID matter note for pen. I'll get back to you. Okay, on this, because it will take some time if I start with the whole explanation. So after I finish everybody else's thing, I'll get back to you.
Okay, ma'am. Thank you.
18623999. You want to ask something?
Yes, ma'am. Ma'am, good afternoon, ma'am.
Good afternoon.
I have a couple of questions, ma'am. First is regarding green GDP. You said that if you are depleting forest, it would be subtracted. That value would be subtracted. Now, suppose the government is giving a scheme for afforestation, then would that be included in GDP? If we do like that, would that be not a positive intent for a GDP? Why are the countries not doing like that, ma'am?
No, we don't have to do it. What you have to do when you are doing it, why should I come and add a value? See, when you are not doing some particular thing, when you are affecting something, basically this is a negative concept what we are trying to see. If I am having like 21% of coverage of forest, if it becomes 25%, why should I be like adding that 4%? That's not the point what we here say, what we want to say here. Right? Afforestation could happen, but overall in the country, is there nowhere that I have like depleted the forest? Then there will be a definite answer, yes. So in that case, I'm going to say that whatever value you have lost because of the depletion of the forest, I minus it from the GDP. That's how we look at the calculation. The calculation is done like that.
Yes, ma'am. Another question is in the previous class, ma'am. Ma'am, you said that NNP at factor cost is considered as the national income,
Yes.
but in when we consider it at the market price, for example, in factor cost, we are considering wage rates now, ma'am. It is being regulated by the government, so it is also a part of a policy of the government. So we can consider that also as a policy, no, ma'am. Then why are we considering at factor cost than at market price? Can you elaborate on that?
Wage is regulated only for certain sectors. Who is coming and regulating the wages in the service sector? Somebody is earning 5 lakh rupees. Somebody is earning 5,000 rupees. Right? So wages is not a complete policy under the government. But if you mention the word taxes, it is done only by the government. And we are all under the compulsion of listening to the word tax, because it's a compulsory levy. Similarly, subsidies is also a choice which the government does. These two things are not into the purview of the private sector at all. You mention anything else, it will be having a combination of both the government's role as well as the private's role. So we are not taking into all those things which are commoner to both public and private. We are taking the components which are only exclusively done by the government, which is the tax and the subsidy.
Okay.
You can't say that all the wages are governed, right?
Right, ma'am. Thank you.
2058134. You want to ask something?
Hello, ma'am. Good afternoon.
Good afternoon.
Ma'am, my doubt is regarding this personal income. You have given an example based on an employer, ma'am.
Yes.
Like they are paying this corporate taxes and everything, but personal income is also for a person like me, isn't it, ma'am? I don't have all these profit taxes. What is for common people, ma'am? Won't we calculate personal income for them?
For the personal income, beyond personal income, we said one more thing for this disposable personal income.
Yes, ma'am.
Where we said like the income tax will be minus out of the personal income.
Yes, ma'am.
Right? So there, if you are an employee and you are paying income tax, the income tax of you will be minused from there. And finally, what is left in your hand will be taken as a personal income of the employee.
Okay, ma'am. And also this green GDP, ma'am, what is the need to calculate this, ma'am? Why should we
This
even
is to
calculate?
see like the one major statement, whether our economy is growing at the cost of environment. Are we damaging the environment and then becoming better off in economics? So in that case, I have to give an allowance for the cost what the economy is doing to the environment. Allowance means
Like a sustainable development.
Yes, exactly.
Okay. Thank you. Thank you.
2036406. You want to ask anything?
Hello, ma'am.
Hello.
Ma'am, could you please explain the difference between disposable and personal income and personal income? Theoretically, I'm saying, not the formula. Because I don't understand why we separately have disposable personal income where direct taxes are subtracted. Because employee perspective, social security contributions are subtracted from personal income. Why can't we subtract direct taxes also?
That's how the CSO has kept the formula, all a policy decision. So I can't say, actually if you ask me, I will put a direct tax or another type of direct tax because corporate profit tax is already direct tax. So I would like to add the income tax into the thing and then call that itself as a disposable personal income. But to make the last layer of the distinction, if you say social security contribution, tax need not be called as a social security contribution. Social security is only to protect yourself in case of a sickness or in case of your retirement. That's the social security aspect. So when they had included corporate profit tax, there itself they could have included it. But finally, they wanted to show it in another layer, distinguished layer, to say something what is available for me for the purpose of consumption. So there isn't any bigger difference in the objective. It's only by formula it is different. Objective of personal income or disposable personal income is only to arrive at a calculation of the money which is available in your hand finally for the purpose of consumption. That's it.
Okay. Okay, ma'am. One more question regarding environmental degradation cost. So, is it actually the imputed cost or the actual cost, ma'am?
If you have already done it, it is an actual cost. You have the environment treatment plant with you.
Then that is also. Yes,
see,
that
you
is
can
also
call that cost as the imputed cost for the environment. So that's the perspective what I wanted to tell. So you are going to take the actual value only. This year I have spent like 50,000 rupees in treating the polluted water means I will minus the 50,000 from the GDP value. But what is this 50,000 is? It is like an imputed value for the pollution whatever I have done. So take it as a different perspective. The same market value, you can call it as an imputed value for the pollution cost. I hope I made the point, right?
Yes, ma'am. But if I erect a treatment effluent plant, effluent treatment plant, then that also accounts for the economic activity in that current financial year, right, ma'am? So
but
if I even
for a negative reason, no, it is not for the purpose of producing an output. and then calling it as a GDP. It is for the purpose of calculating the cost and minusing it from GDP.
Okay.
Right?
Okay.
I am doing it as a new creation only, agreed. But that is mainly for the purpose of minusing from the GDP, not to add as an output to the GDP.
Okay. Yeah, I understand. Thank you.
Thank you. 2097948, you want to ask anything?
Good afternoon, ma'am.
Good afternoon.
Madam, I would like to know about the corporate profit tax.
Corporate profit tax, I'll teach you in the public finance class. This is only to introduce the concept that 1% of your profits which the companies make will be paid to the government in the form of profit taxation. Right? So if we are making 1 lakh rupees as profit, we have to give 30,000 to the government as the profit.
Okay, okay.
That rate and all I'll tell you in a subsequent class. Why are we mentioning here in this class is, if I have earned 1 lakh as a profit, all that 1 lakh I cannot share it with my manager, another manager, and take it back to my home. Because 30,000 will go away as the taxation. The rest of the 70,000 is what is available for us to share between two of us. So I'm trying to tell you what amount will not come into your hand has to be minus out of the national income. That's the context in which we have studied that for today's class.
Mm-hmm.
Right?
Oh, okay, ma'am. Ma'am, can you tell the difference between this personal income and this DPI? That is
disposable personal income is a further calculation from personal income. There is no difference in the objective. Objective is to calculate finally what is the amount left back in your hand for the purpose of consumption. So it is not that they are two different concepts. Personal income forms the base for the calculation of disposable personal income. So it is a furthering of the calculation. It's not like two different things. They are traveling in the same direction, but the calculations are becoming more and more finally when you reach the concept of disposable personal income. Where in disposable personal income, you are going to minus the income tax at the last level and make the PI into DPI.
Okay, ma'am. So we can conclude that it is a sum of all the income received by an individual.
Income received after all the deductions.
All the deductions.
All the deductions.
Okay, ma'am. Okay, ma'am. Thank you very much, ma'am.
Questions அனுப்ப சொல்லி சொன்னேன். பாக்கி questions type பண்ணி அனுப்ப சொன்னேன். So I think the rest of the questions, if you type and send, I will reply back after the session, like in the afternoon. With today's these questions, we are finishing the class. As I told you, we are going to start the next class with the mains questions and some more concepts and slowly get into the economic growth and development as the next part. Thank you.